A very good afternoon to all our viewers. Today we bring to you an exclusive webinar on order flow analysis and our recent integration with GoCharting.com, which we've gone live very recently. So a lot of customers would be interested in knowing more about the platform, what all you can do, how you can analyze your trades, how you can enrich your strategies. So it will be an exciting session. Hope we see a lot of questions. You can always put them in the chat. So just a brief about GoCharting. GoCharting is an advanced web and mobile-based charting, trading, and analytics platform. It supports all asset classes, including NSE and MCX. It's the world's first and only web-based platform that supports order flow charting on the web. And currently, they boast of more than 130 built-in indicators and 100 drawing tools. That's all. In a brief about GoCharting. We have great speakers on board today who can take you through the platform itself. A brief about who all we have today, the guests. So we have Angad from GoCharting. He's a directional trader and he specializes in order flow and market profile analysis. He started his trading career with crypto in 2012 and then eventually started trading in the Indian derivatives market in 2017. He's a web developer and a growth marketing professional with a keen interest in business strategy as well. Currently, he's the marketing head of GoCharting.com. We also have with us Mr. Santosh today, who's an intraday expert with 15 years of trading experience. He's a directional trader and he specializes in order flow and market profile analysis. He primarily trades Nifty, Bank Nifty, Crude, S&P 500, and Bitcoin futures as well. Mr. Santosh has handled funds of up to 4 CR and advises on funds up to 25 CR. Welcome, Angad and Santosh. Over to you, Angad. Please take us through GoCharting and all that you have to offer for our customers.
Hey, thanks, Otik. Thanks for the kind introduction for all of us. Hello and welcome, guys. Good afternoon. I hope everyone is excited as I am. Firstly, I and the entire GoCharting team would like to thank Otik and the entire ICICI team for having us on and giving us this opportunity. Lastly, all the people who made this webinar and are working towards getting you this really cool content. Thank you so much. Lastly, thank you also to all of you who are logged in on a Friday evening, afternoon. It tells us your commitment to learning and motivate yourself. So I promise you that by the end of this video, each one of you will live with practical knowledge that will help you become a better trader, a logical trader. We are here to learn, how GoCharting is building really cool tools for retail customers like you, and to bridge the gap between amateur and professional trading. Having said that, my CEO and colleague Sushant will give you a quick introduction on how you can log in via your login credentials via the GoCharting application, the charting application. And then on, the mic will be given to Mr. Santosh, who is my dear friend, mentor, and one of the very few genuine intraday traders in India. I hope you stick through this entire session and get some valuable, actionable knowledge out of it. Thank you, guys.
Strategy builder and payoff chart and OI analysis platform. So we are everything clubbed into one place. So we are a one-stop destination for the Indian market today. So first up, if you are an ICICIdirect user and you are first time registering to our platform, right, as part of an offer, you might be aware that we are giving you a trial period of a month. So during this period, you have access to all the premium features in our platform for all the asset classes, and you should go ahead and try it. Okay, so we have this charts on the two platforms are charts and option desk, so you have access to both of them and you should try both of them. The way you access them is basically you just type a symbol. Say for example, I type Nifty and you go to the symbol, so you have Nifty spot, Nifty future, Nifty options, right? So once you click on any of them, it will take you to this particular, let me go with say Nifty futures, right? So this is the Nifty futures platform, right? The chart right now opening, and the moment you open, you will see that on the right hand side you will have this panel called App Store, and in it you will find ICICIdirect. So if you wish to trade from our platform, you have to go and click here on ICICIdirect, and since I've already logged in, you will see that the broker is connected. Okay, once the broker is connected, you should be able to go to the ledger in the bottom, and you will be able to see all your trades, your positions, everything that you wish to. Okay, so this is the main charting platform, where on the top side you have all the controls to kind of change. So all the premium features that you normally find in other platform is available to you for free. That includes custom time frame, volume profile, even market profile, right? How you can build your strategies, and that is something that we'll cover in a greater detail. So you do have something called as the option desk. So you click on the option desk, it will take you to the option desk platform, where you can build all your complex strategies like iron condor, iron fly, everything that you can think of. It has a very cool interface with option chain, OI analysis, payoff charts, everything that you can think of is already built into the platform here. It comes in two themes. It comes in both a dark and a white theme, and you have the ability to build as many strategies as you want. And this entire thing is available to you for free, the entire option desk platform for ICICI users. You can directly trade out of it. You can build your strategies. For example, I can quickly show you how to build a strategy. Suppose I want iron condor, I can just quickly click on iron condor and then just apply, and then you can see the iron condor created for you on the platform itself, right? So all of this is fun stuff are possible, but today, without wasting any time, we will deep dive into the main USP of our platform, which is order flow. So many of you do not know the concept of order flow, and we have the right people in this forum to walk you through this. So Santosh, without any more further delay, okay, we will quickly deep dive into order flow.
Sure. Yeah. Hi, Sushant. Hello, everybody. So I'll just quickly share a few slides and just help you walk through the order flow stuff. Just give you a quick brief of how it works and what it means essentially, and how that information can be useful to it. Some of you may know it. Some of you may as such may be new to it, but this session should help you get started with that. Okay. So just a second. Let me know if you're able to see the chart, the presentation. Is it visible? Yeah. Okay, great. I know quickly running through essentially what Sushant mentioned, just a brief of it again, all over again. So there are 150 plus built-in indicators, and there are 14 different chart types that you can get covered, and different drawing and other tools that Sushant covered as part of GoCharting package. What you additionally get is doing ability to do profiles, both market profiles and volume profiles, essentially, which is again built into the platform in terms of as an overall package itself. So there is nothing additional that you need to get it. So this is available, both market profile, volume profile, and different types of profiling techniques are available. And what is unique and niche to this platform is the ability to view the order flow charts. Okay, order flow might be known to you in a lot of different ways. Somebody used to call it tape reading. It is called footprint charts, or imbalance charts, or cluster charts, and things like that. But in general, order flow essentially means, as the term as it stands, is the flow of orders. So what we try to infer with this is the different orders that are getting both placed and traded in the markets. Okay, and these are the orders that drive the movement of the markets. These are the orders that drive how prices move. Okay, and these orders essentially help you analyze what is behind the candle. So if there are a lot of times you would see a market stopping at a certain place, or market breaking out of a certain place, right? And you would not know what magnitude and what order that is taking place and who is driving it. This is what helps you to see what is actually happening within the candles. If you see this is, each of these are traditional candlesticks that you see each of these. And what you have on the left and the right side is the order flow information, which is essentially looking into the candle. The left side, for a quick brief here, is essentially the seller order information, and the right side is the buyer order information that is available. Okay, so these order information can be classified into different sets of information to help you understand and identify the magnitude, the importance of different order types. Okay, So where does order flow fall in the overall context of the things? This is again a quick view of things. So what most of us are aware of, are today using, is this part of the traditional technical analysis in terms of analyzing the markets, which is both the candlestick, your indicators, and probably looking at your LTP in the terminal itself, right? So what, how does the information flow if you really look at it from a outside point of view in the exchange itself, right? How does the information actually flow? So you have the depth of the market as the most the fastest information that is available in the exchange, which is basically all the orders bit, placed by both institutions, retail, prop, HNI, whatever you call it. So these are the orders that are actually placed in the exchange. So there could be millions of orders that are getting placed, and then eventually a fraction of it gets traded, because not all orders get traded, right? All orders can be placed, cancelled, and etc., right? So whatever is traded is reflected in the trade book. Okay, so and then in the trade book is a list of, it's like a ledger, basically it's a ledger of information. So whatever is getting traded, you'll see it on a ledger like information. And then we have the footprint charts, which is basically organizing that trade book data into your different in the footprint or the order flow charts, which is what I was showing you in the last slide. Okay. And what you see today, so this is something you probably do not see or do not have access to, but what you see today is from something here on, which is your broker terminal LTP. Your then each LTP across a 5 minute gets organized into a candlestick chart. So you have maybe every second the prices are changing, and that will get organized to a candlestick chart. And then when you average out a certain set of candlestick over momentum, whether over mean reversion and other things, you will get different indicators. Like, because if you see, all the indicators are a certain average computation of your price or a volume, right? You will eventually get the RSIs and the MACDs and other thing indicators of the world, right? Okay. So when I come in as an analyst, somebody whom I come in, and when I'm trying to organize and understand the market, indicators are actually the slowest piece of the information. And the something faster than that is the candlestick, and then the LTP, and overall the DOM as being the fastest piece of information, right? But what is the challenge of using too fast information, that I am not able to really interpret all of it, because this data is not very persistent, right? DOM is something that will change very frequently, and it is not very persistent, right? So eventually somebody who's analyzing the market and trying to make a sense of the market, it's a trade-off between persistence of data, of how much, what data can I really trust with it, because if that data, the order is coming and the order itself is going away from the market, then it is, and I cannot base myself on that order and the speed of the information of what is happening, right? So that's where, if you see the footprint or the order flow charts form, essentially they sit at a very sweet spot between data being not too fast and not changing that fast that you are not able to make sense of the data, and not data being not too slow as well, like an indicator where by the time you make sense of the data, the market has moved, and your risk reward to take a trade, especially if you're a short-term trader, completely goes haywire, right? So this is where this chart falls in the ability to see this footprint and other information falls in between. Okay. Quickly, what are the additional information you will get with when you start using a footprint chart? Okay, so you might be today using a traditional candlestick chart, which gives you market patterns and understanding, let's say, different patterns like head and shoulder, higher high, higher low, cup and handle, and other patterns. Footprints will also help you see those patterns. Number one. Number two, uh, to be able to do market projections, like once you have a pattern or once you have certain retracements and other thing, you can do market projections in both. Number three, context development, where market is trending, range bound, and all. So we can typically look into the price charts and candlestick charts and build those context and view whether market is in a trending bullish or whether it's correcting and things like that. Then you look at an order flow chart, which additionally gives the order flow information. So what is getting traded? So if it's a green candle, I actually know within that, okay, whether there were enough buyers to push that candle up, or it was based on a very thin order book or a very thin data that is happening. Then I can see the aggressive participants. So in market, we classify every order as an aggressive or a passive participant. Okay, so we can see whether when you say buyers, when you hear that, okay, there were more aggressive buyers, or more buyers have stepped in. See, there is never more buyer than a seller in the market. So for every buyer there is a seller. Only difference is there is more aggressive buyer and there is a more passive buyer, right? Aggressive buyers is somebody who is chasing the prices, who is entering a market order. A passive buyer or a passive seller is somebody who is waiting for the prices to come to him. Okay, so the other thing is trap traders. One of the most common intraday or short-term trading analogies is to find out where sudden set of traders have got trapped, whether the buyers have got trapped or sellers have got trapped, and then trading market reversals out of it. Okay, which will help you view this. So when you look at a traditional candlestick, you might not figure out whether somebody tried to do a breakout buy but could not, and then there are trap traders who are stuck at that point. Ability to visualize stop loss hunting, which is another common problem all retail fails when we see sudden spike above a range, below a range, and then prices completely coming back, which is something you'll not see in a traditional candlestick. Why it happened, you will not make sense of it. But here you can actually, with the order flow charts, you can see whether yes, that spike was a large stop loss hunting move by market participants, and hence chances that market can actually hold back and then get into that range again is high. So those sort of things you can see that. Dominant side for each candle, you have a green candle, right, or a red candle, which is the only information you see in a traditional candlestick, which is basically whether the candle closed higher than the open, then it's a green candle, else it's a red candle, right? But within that, who are the dominant participants? Are the buyers dominating that green candle move, or it is not lack of much buyers, so that then it's a weaker green candle. So you can actually get into another level 2 detail of that candle to figure out whether it's a weaker or a stronger green candle, and being able to make sense. If it's a strong green candle, you expect a follow through. If it's a weaker green candle, you're cautious. You understand that probably it's a fake move out, and you can want to close the position or not enter a long trade or a short trade if you want to, right? Okay, the other is confirming your support and resistance is real time. See, most of us today rely on support and resistances that we have drawn from previous days charts or recent charts. So I'll go to probably look at previous days charts, draw your pivot points, or maybe draw the high, low, and other thing, right? These are levels that we are drawing based on our understanding of the market. But what is important is tomorrow when you come in, you need to know whether my understanding is the same as the dominant market participants, the big players. Do they believe that this level is important or not? Okay, that is where I think your edge comes in, analyzing and then executing that trade level well. That's where, when when you look at, okay, I have drawn a support or resistances, now I want to see the order flow activity around it to validate whether yes, my assumption that yes, this level is going to hold is correct or not. So that helps you validate those levels. Okay, and then another is putting market defined stop losses and targets. Today, most of the times, the way we traditionally manage stop losses and targets is typically through your let's say, okay, I have entered at 100, I'll place a 5% stop loss, or I'll place a 10% stop loss. Okay, that kind of a thing. Or maybe based on a certain candle high, low, something like that. But actually, you can place a much better stop loss looking at an order flow charts. Where was the last time, let's say I'm long, and I'm long at a certain price, and prices have moved up. I can actually see, okay, in between this range, where was the last time a buyer has come in, and I want to place my stop loss below that strong buyer, so that buyer will continue to hold the market, then my stop loss defense. So I can actually place more dynamic, more meaningful stop losses. Okay, and then, as I said, manage risk with your candle data. One of the, again, very common problem that most traders face is, let's say you have a big opening candle of 100 point or a 200 point in Bank Nifty, and you want to enter outside that candle. So how do you manage a stop loss? If it's a green candle, if you look at a traditional candle, there is nothing in between. So you really do not know within that green candle where most of the buyers or sellers are. But with an order flow chart, you actually can see it. So if you go to the next slide, you'll quickly see this is a traditional green candle or a red candle that gets formed on a charting candle. But with an order flow chart, I can actually see within this green candle, buyers were concentrated at this particular price level. So in this entire green candle, the buyers were actually concentrated at this particular price level, and I want this level to be defended if price has to follow through, right? Okay, so if I was just trading a candlestick chart, maybe I'll have a stop loss somewhere here or below this. But if if I'm trading with this chart, when I enter at the break of this candle, let's say as an example, I can place a very aggressive stop loss at a much more meaningful level and defend my risk, defend my risk better. Okay, so as I said, the footprint chart that you see on GoCharting platform, it's a web-based chart. That's another beautiful thing. So it's web-based. You don't need any software installations or anything. You traditionally access any web-based data, you access it, and you are able to see this chart real time. Okay, so it's an effective tool of which offers 5 times more chart visibility as compared to any other charts that you see. So normal charts will have only open, high, low, close data. It will have a lot of other metrics like buyers data, sellers data, where buyers were concentrated. Understanding that, it allows you to make your accurate trading decision making, so manage your risk better, understand volume, understand price, and then it provides an X-ray within the candle information itself. Okay, the chart here, as I say, is presented in just to again summarize. On the left, you have the market sellers participants, which is basically willing to drive the price down. On the right, you have the market buyers participants. Okay, so what you want to see is, when you look at an order flow charts, again, quick summary for this session is, I want to see whether the buyers are able to dominate. There are more buyers or not, and the price is in sync with the buy or not. If the price is not in sync, that means there are alternative participants who are are limit or passive sellers who are trying to force the price to stop at a certain level. Okay, order flow charts, it is good for any market, any stocks, any underlying. You want to trade commodities, equities, futures. Okay, anything that has a good liquidity, good volume. Okay, it is preferably used for futures markets. So if you have stocks versus futures, I think there makes more sense to have futures or fixed income or currency markets, where you have a lot of liquidity and volatility. Okay, you can also use it in FX and commodities market, but this will keep it outside this discussion, because generally there are other nuances to reading order flow in FX and commodities markets. Okay, so we'll sort of keep it outside this. And just a quick if you want to take one summary of what order flow is all about, and this is a quick one. So we are in market, we are classifying the orders into passive and active buyers. Okay, so passive is somebody who are placing limit orders at different prices, and they are waiting for prices to come to them. So they are the limit players who will wait for prices to come to them. They are not interested to chase the prices. Okay, so what they do is, they don't drive the prices, they are waiting prices to come to them, while the active ones are who will place market orders to move the prices. So active ones will come into play when they anticipate that, yes, if I enter a market now, there is an higher risk to reward. I can make a certain move and make money eventually. Everybody wants to. The only reason you want to enter a trade is to make money, and that's the reason for everybody, be it institutions, retail, or anything, right? So passive wants to sort of wait for the prices. Active will hit the passive prices, and they will want to pull the market up. So if a guy who is sitting at an order at 101, and there is another guy who's looking at a 99 buy, no trade will, that is a core context. No trade will take place if a 99 somebody is, let's say, having a sell at 101 and somebody is having a buy at 99. No trade will take place between this until some guy comes in and says, okay, I'm willing to buy from you at 101, or I'm willing to sell to you at 99. That's the trade, and that's the market order. That's the we are tracking through the footprint charts. Okay, that's the market order that essentially we are tracking through the footprint charts. Generally, as I said, they wait for prices. Passive ones, they are the ones which you call liquidity and other things. Okay, and this is typically what you understand with liquidity and other things. That is how the industry knows it. And while at the same time, aggressives are the one who are chasing the prices. They drive the markets. Aggressive orders are actually plotted on a footprint charts and help you understand whether market participants are intent to sort of push markets higher or lower. Okay, I think we'll keep this session to this one only. Just and I think one quick thing. What additional information that you get, I'll quickly summarize this. Okay, I said, you in the traditional candle, you have the bullish candle and the volume and other information, open, high, low, close. That's kind of inference you can make, right? It's a bullish candle. What is the volume? That's all. But in this candle, you can make a sense of what is the volume, what is the delta, which is the net of buyers minus sellers. This is a different from the option delta. Delta essentially means here whatever is the sum of all the buyers here minus sum of all the aggressive sellers here. So that is a intent of the participants. If the delta is positive, means that there are more buyers than sellers. The point of control, which is nothing but the most traded price within the candle. So this candle will not let me know what is the most traded price, but this quickly highlights automatically the software that, okay, this is the most traded price within the candle. And then you are looking at the relative change in delta and the day delta. So I want to see the trend of the day delta of whether markets are sort of pushing higher or lower based on that. Okay, so if the markets are going up, I want the delta to go up in sync. Then we know the trend will persist. Or alternatively, we say that, okay, if the delta is not going in sync with the market, then there's a change of trend that is possible. Okay. I think for now we'll keep this to this one, and we can do more detailed sessions depending on the intent and interest. But for now we'll keep it to this one. Any questions we can take up with the time?
Yeah, thank you, Santosh, and thank you very much, Angad, for taking us through order flow analysis and the GoCharting platform itself. Great learning, I think, even for all our viewers. A few frequently asked questions that I'd like to throw out for you, Angad. There, uh, I mean, a lot of times customers do ask, can we use order flow analysis as an add-on to our normal technical and fundamental analysis? Is it a way to identify false breakouts, or how do you enrich your trades further with order flow?
Uh, Absolutely. One of the key mistakes or key myths is order flow. It's its own thing, and you need to go through, high learning curve. Yes, you need to do that, but it is treated as do what you're doing and improve your edge using order flow. Order flow pulls apart the candles essentially. The key part of order flow is it blends well with what you're already doing, your strategies, your setups, and it makes them much more accurate. So yes, in fact, not only do I say, use order flow, use it in conjunction with what you're doing right now. I encourage it, and that's the only way you can actually start learning about this a slightly complex topic. Don't shy away from learning order flow. Give it some time, and I'm sure whatever the ICICI users are right now, using their own setups, whether it be price action, GAN levels, pivot points. It works really beautiful with pivot points. So give it a try, I would say. Anything else you would like to add, Santosh?
Just one thing. So within order flow, actually, there are ways of subtly learning and exploring it. So, for example, if it's the bid ask information seems very overwhelming to start with, you can just start looking at the delta bar, delta candles. Okay, if you're already using it, that is a, let's say, a summarized information of the bid ask, and gives you a, let's say, more smoother transition into understanding the order flow and other information. Okay, so maybe you can start looking at the delta bar and delta feature basically. So that way it's a more smoother transition, and if the bid ask might seem overwhelming, which is fair, and so that way you can use that. Okay.
Great. Another common question that we have from customers, Angad, is, how often can swing traders resort to order flow analysis? How relevant is it for swing trading?
It's good for entries on a slightly higher timeline, on 15-minute, 30-minute, probably 1 hour. See, order flow is such a unique tool which sits right in between intraday, but it can be modified or looked from a different lens. If you go on a slightly higher time frame, and when you're trying to match the ebb and flow of the higher time frame, the market structure in terms of price action, it can get you really good entries and exits. If you're a weekly swing player, if you're a monthly swing player, or even if you are a fundamental analysis value investor for that matter.
Great. Thanks, Angad. A final question that we have from customers usually is, you did talk about imbalance, right? What we also get is, what is point of control, and how do you identify it? What does it stand for?
Okay.
Yeah.
Okay, so the point of control is, very simply put, the most prominent traded area within a day or a candle or a whatever time frame you're taking. So essentially, where most of the volume happened. Okay, so within a candle there will be a zone or a price point where most volume would have happened, right? And that is the point of control. So that helps you prioritize that price point, let's say, over the other price points within the candle itself, right? Okay, that is one. And imbalance is, in very simple terms put, when if there are let's say x number of more buyers than sellers at a particular price, the software helps you quickly identify it through automated color coding. That way, it is an easier read on the information, because if there is a sudden move that happens, and that happens because of, let's say, 4 times more buyers coming in because of that move, you want to take note of that, and you want to so you can quickly configure that in the software, saying that, okay, give me a color code yellow whenever there is 4 times more buyers, basically. So that way, it quickly catches your eye. It's just color coding of the information based on a field condition, and you take note of it, and then if it's so many times more buyers have stepped in the market, the chances that the price will follow through is higher, let's say, in most cases. Okay. Similarly, on the sell side, it's the other way around. If 4 times more seller, then you want to put it as 4x on the sell side. And if so many times more sellers have come into the market, chances are that the trend will persist on that side.
Sure. Thanks a lot. Thanks a lot, Mr. Santosh. One final question I see from the YouTube chat is that, can we access order flow charts if you open an account with iDirect? Yes, you can. GoCharting is now available free of cost to all our ICICI customers. Angad, if you would like to take viewers through the plans and the subscription models that you have with GoCharting?
For sure, I can do that. Just share my screen. Sorry. You can see my screen.
Yes, yes.
Right. So right now we have a flat 50% off on all annual add-ons. Our usual price is around 1150 for each data pack. Now the thing how it works on GoCharting is our entire platform is free. In fact, the option strategy builder is completely free. All you have, and the charting platform is free. Orderflow, advanced profiling tools like market profile, volume profile, all of them are free. All you have to do is subscribe to a data pack. Now most of you guys must maybe option buyers or sellers on trading on indexes, bank nifty, right? And since only futures generate volume, and these are all volume based tools, right? So you have to get NSE futures, 10 active symbols for monthly. Now monthly used to cost 1150 a month, but right now we are running a very limited time, our biggest sale ever, 575 a month, although this is only on annual plans. All right, so on annual plans you'll probably get one data pack for 6900. All right. Then if you want to look at individual option contracts, so let's say 40,500 CE today, you can look at it. You can look the individual chart and do chart analysis on a specific contract. The MCX future is for commodities markets. If you are US oil or a crude oil trader, right? Cash is for equity trading. These are our four, data packs. All of them cost around 13,500, around that 14,000 approximately, including tax a year. Right now we are doing a flat 50% off for all of you guys. So yeah, I suggest you to take benefit of this offer. Give it enough time. Give the platform enough time. We do run regular educational series to equip you with the right knowledge to use our platform as well. So it's actually a very good complete platform, charting, option strategy, and plus the learning that's needed to go with it, right? So the entire life cycle of a customer trader, a mature or an uninformed trader, can use these logical tools, real-time tools, to become a really good trader, turn into an informed trader, right under the entire umbrella, which is GoCharting.
Great. Thanks a lot, Angad. Thanks a lot, Santosh, for your time today. So yeah, to summarize, you can use all of GoCharting's features, use order flow, all that you want. All that you have to do is connect your ICICI Direct account and get started. Thanks a lot for the informative session, Angad, and the entire GoCharting team. Look forward to many more informative sessions for our customers. Thank you. Thank you for joining in.
Thank you.